Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Mathew. Will the momentum continue in India's equity markets? That's the question at the start of trade this morning. We'll know soon enough. A trade is only half an hour away at this point. But my guest today is Rusmik Oza, Senior Vice President and Head of Fundamental Research at Kotak Securities. And we are going to be talking about a few stocks that could be at the center of action today. Good morning, Rusmik, and thank you so much for joining me. I want to start by asking you about NMDC, and it's, I think, going to be in focus today because of the buyback that was announced by the company. 1,378 crore rupees worth of a buyback. It's been priced at 105 rupees a share, which is a premium of less than 12% to the closing price of yesterday. Now, interesting, right? That 12% number, because some of the buybacks that have been announced in the recent past have been at a significant premium to that 12%, some going as far as 20, 25, 30%. So what do you think about the price, and what do you think about NMDC as a whole?
Yeah, hi, good morning, Alex. NMDC, I think there's little slight disappointment on the buyback offer as such. The acceptance ratio is going to be very less because there are two things. One is only 4.3% of the equity is getting bought at 105. And since the government will also participate, the acceptance ratio is going to be a little poor, between 4 to 5%. So this is one reason which may not lead to any big spike in the stock price. Nonetheless, the business is improving, which is good. And which will help the company at least to offset some of the negatives which were there in the past. They have been taking price hikes in the last quarter. They have done twice price hikes, and going forward the sequential improvement will be better. We have a target price of 110 on NMDC, so there is a decent upside still left in the stock. Couple of things in the last quarterly results which have come in is realizations on a YOY basis have been poor. They have less exports. To that extent, they have saved on cost also because of rate and other aspects over there. There are some ifs and buts, still hanging around with the stock. We need to get clarity today. There's a earnings call. Probably we'll get some clarity over there. One is in the last call they had mentioned they want to demerge their 3 million ton steel plant and then look at divesting that. That is one critical factor to watch out for, because the re-rating in the stock will only happen if that goes through very successfully. And two is Karnataka recently, renewed for the renewal of the mining. They have increased the royalty by 22%. We need to watch out and see if there is similar hikes in royalty for their other mines which are coming up for renewal. That could have a little overhang on the stock. But valuations are very cheap. Trades at around 5.5 times EV to EBITDA, and to that extent, maybe there is upside to around 110, which is a target price.
Interesting. Okay, so from NMDC, which still has a potential upside, we're going to two stocks that have, I think, disappointed a little bit with regard to earnings. We'll start with InfoEdge. And so the quarter revenue is down about 19%. And I think the consensus estimate for revenue was 278 crore. It's coming at 256 crore. Net profit, at least optically, is significantly higher than the year ago period, but I think that's also on account of an exceptional loss of 75 crore rupees in the base quarter. Even the net profit is below estimates, and the margins, Rusmik, have significantly underperformed. They've come in at 20.1%. I think the consensus estimates were as high as 35.6%. So what's the view on InfoEdge? And it's likely to underperform today.
Yeah, so Alex, we had a sell rating on the stock. Our target price is 2,800, and there also we'll have to wait for the earnings call today to get a revised fair value post the call. But yes, you're right. As you mentioned, there has been a clear disappointment on a lot of front. Starting with Naukri.com, which is the main flagship, revenue generator. Revenues were down actually. There is a little deferred revenues also down. And there has been a pressure on the realization also over there. On 99 acres also, you have seen a sharp decline both in revenues and deferred revenues. And on a PBT basis, I think that they've reported a 10 crore loss over there. There has been improvement on Jeevan Sati, but there is a 12% revenue growth. But there also the loss on PBT is almost around 35 crores. So what has happened is there has been a spike in advertisement expenses, and there's a deleveraging, negative operating leverage which is played out in case of the company. we need to watch out because Naukri.com and 99 Acres actually are economy driven businesses, so we'll have to wait for the recovery to happen, and maybe second half onwards we'll see recovery over there. For our target price of 2800, we have valued the Naukri.com business at 45 times. We value 99 Acres at around 12 times sales, and Zomato and Jeevansathi, we have been valuing it at the last funding round which has happened for the company. So all this SOTP based price target comes to around 2800. We had a
Hmm.
sell. I think we would continue with a little negative rating only going forward also.
Hmm. Of course, there's a caveat there that you're going to base it on the earnings call that will take place in just a short while, Rasmik. But you do have a sell call, and I think the move since March would indicate that now would be a good time to take some money off the table, basis your recommendation. I wanted to talk about the last stock, which is Tata Power, and here also, I think on the margins front, particularly, there is a bit of a disappointment. It's coming at 24.1%, and the estimates came in at 25.7%. Revenue was higher by about 8%. You had net profit also growing about 8%. And we've seen that the margins have declined due to higher employee costs and also higher cost of power purchased. Now, what is your view on the counter as a whole, though, Rasmik?
Yeah, Alex, we have been positive on Tata Power because there are a lot of levers which will play out in case of Tata Power going forward. Just to recollect, post the last Q1 results, the management has given us a nice vision of the next 5 years, where they've said that they want to aim to double the revenues and triple the profits in the next 5 years. They're looking at increasing the renewables business by almost 6 times in the next 5 years. They're not going to invest anything in coal-based power projects going forward. These are some of the things. Then they're also looking at deleveraging and reducing their debt by almost half in the next 5 years. So last quarter results, I think yes, there is a little disappointment, but nonetheless, for the whole year, we are expecting a flattish earnings growth for the company. And on a adjusted basis, I think they have reported around 10% growth on the bottom line. So what will happen is more than the operations, I think so there will be a lot of below the operating line. There will be a lot of changes which will help in terms of reducing debt, in terms of monetizing assets, reducing the cost of interest also. So, for example, they are looking at monetizing assets of the renewables and moving into InvIT. They're also looking at selling some of the non-core businesses. So these two things itself can generate around say 11,000 crore in the next couple of quarters for the company, and that could help a much more higher bottom line growth for the company going forward. So on a SOTP basis, we have a target of rupees 70 on the stock, and there's one more a good thing for the companies. Is their UNPP project in Mundra, which has got merged in the company. So they have some 18,000 crore accumulated losses. So that losses can offset any gains, and it'll act as a tax shield for the company in terms of
Right.
managing and reporting a better profitability.
Right. Okay. So we've had three interesting stocks in this conversation. Rasmik, thank you so much for joining me this morning. And like I said at the start, it'll be key to watch whether the momentum continues in the equity markets. Right now, indications are that we will be slightly positive at the start. Thanks, as always, for joining me this morning.
Thank you. Thanks, Alex.
And to you, dear viewer, thank you so much for tuning in. It's been a pleasure talking to you as always. Do stay tuned. There's a lot more coming up in just a short while on Bloomberg Quint.